everyone, welcome back to the channel. Today we're diving into a crucial topic for any investor navigating the volatile waters of global trade, especially when it comes to the ongoing effects of the Trump-era tariff policies. As trade tensions continue to ripple through the market, the tariff war has created a lot of uncertainty for many businesses. But not all stocks are equally vulnerable to these disruptions. In this video, we're going to take a closer look at which stocks might actually be immune or at least less affected by the tariff debacle. Whether you're a seasoned investor or new to the game, understanding which companies stand strong in the face of trade turmoil could be the key to protecting your portfolio. So let's break down the factors that make certain stocks more resilient and which industries or sectors could be your safe haven during this unpredictable time. Understanding the tariff debacle. Before we jump into the stocks that might be immune to tariffs, let's quickly review the broader picture. Since Donald Trump's administration, the US has imposed tariffs on various products, especially from China, to address trade imbalances. These tariffs have disrupted supply chains, increased costs for manufacturers, and created uncertainty in the global economy. But tariffs don't affect every stock equally. It depends on factors like their supply chain setup, revenue model, and dependence on international trade. Identifying immune stocks. Key traits. Now, let's break down the characteristics that make certain stocks immune or at least less vulnerable to the effects of tariffs. These traits include domestic focus. Companies that rely primarily on domestic production and sales rather than importing from countries hit by tariffs tend to be less affected. Diversified supply chains. Companies with supply chains that aren't heavily dependent on countries impacted by tariffs can mitigate the risk posed by these global trade shifts. Strong pricing power. Companies that can pass on cost increases to consumers without sacrificing demand, especially in industries with little competition or essential products, are better positioned to handle tariff-induced price hikes. Tariff exemption. Some industries and companies may be exempt from tariffs due to government negotiations or special circumstances. Suggested stocks that may be immune to the Trump tariff debacle. Here are the stocks that may display resilience to the Trump tariff saga. PEP, PepsiCo Inc. MO, Altria Group Inc., BMY, Bristol-Myers Squibb Company J&J, Johnson & Johnson. CAG, Conagra Brands Inc., GIS, General Mills Incorporated KHC, The Kraft Heinz Company, NOC, Northrop Grumman Corporation, SYY, Cisco Corporation. And what are the common factors encompassing these stocks? 1. Domestic revenue focus. Most derive a significant portion of revenue from the US, e.g. MO approximately 100%, SYY approximately 90%, SAG GIS approximately 80%, reducing direct exposure to global trade disputes. Exceptions, BMY and J&J have substantial international sales, approximately 30 to 50%, but their healthcare products face less tariff sensitivity. Second, pricing power and inelastic demand. Essential products, food, PEP, TAG, GIS, KHC, tobacco, MO, healthcare, BMY, J&J, and defense, NOC, are non-discretionary. Consumers prioritize these even during downturns, allowing companies to pass on costs. 3. Limited supply chain reliance on China, minimal exposure to tariff-vulnerable inputs versus tech or autos. Exceptions include KHC, some packaging materials, and NOC, aerospace parts. Fourth, dividend aristocrats. Many are dividend stalwarts, J&J, PEP, MO, GIS, with long payout histories, appealing to risk-averse investors. Let's take a closer look at some stocks that are potentially more resilient to the impact of tariffs. In this table, we've outlined companies across different sectors with varying degrees of tariff immunity. For example, PepsiCo, PEP, a leader in the beverages and snacks sector, has high immunity to tariffs. However, it still faces risks from commodity costs like aluminum and corn. On the other hand, Altria, MO, the tobacco giant, is almost entirely immune to tariffs due to its domestic focus, though it faces risks like FDA regulations and declining smoking rates. Next, in the pharmaceutical sector, Bristol-Myers Squibb, BMY, shows moderate immunity to tariffs, with the company's biologics being less affected by international trade disruptions. Johnson & Johnson J&J, with a diversified portfolio of drugs, medical devices, and consumer products, faces risks like litigation, but still maintains strong tariff resilience. For packaged foods, Conagra, CAG, and General Mills, GIS, have high immunity despite input inflation from items like wheat and dairy, and Kraft Heinz, KHC, although facing challenges like high debt, still offers moderate immunity. In the defense and aerospace sector, Northrop Grumman, NOC, shows moderate to high immunity, supported by government budgets and a solid contract backlog. Lastly, Cisco, SYY, a leader in food distribution, is highly resilient to tariffs but deals with labor costs and margin pressures. Each of these stocks demonstrates varying degrees of immunity based on their sector, revenue model, and exposure to global trade disputes. Understanding these distinctions can help investors navigate the impacts of tariffs effectively. Now, let's break down the tariff impact ranking for these stocks. This ranking highlights which companies are most immune to the effects of tariffs and why. At the top of the list, Altria, MO, ranks as the most tariff-immune stock. This is largely due to its purely domestic focus and the inelastic demand for its products like tobacco, which face minimal external market pressures. Coming in at number 2, Cisco SYY benefits from a strong B2B distribution model, which reduces exposure to international trade issues. The third position is a tie between PepsiCo, PP, General Mills, GIS, and Conagra, CAG, who have solid tariff immunity thanks to their status as staple food producers, though they're still exposed to input costs like wheat, dairy, and corn. Next, Northrop Grumman, NOC, ranks 5th. As a defense contractor, it's shielded politically, but global sales complexity and shifting defense budgets can still affect the bottom line. Johnson & Johnson, J&J, and Bristol-Myers Squibb, BMY rank low due to their international exposure and global sales challenges. Despite this, healthcare demand remains relatively stable. Lastly, Kraft Heinz, KHC, is at the bottom due to its higher debt levels and restructuring needs, which amplify the risks associated with input cost volatility, making it more sensitive to tariff changes. Bottom line, if you're looking for the best tariff shields, MO, SYY, and PEP stand out. They're predominantly domestic and have solid pricing power. For those with moderate risk tolerance, NOC, J&J, and BMY are worth considering, but be mindful of their global exposure. And for those willing to take on higher risks for potentially higher rewards, BMY and NOC offer opportunities, particularly if defense budgets rise. Remember, these stocks are not identical hedges. They offer varying degrees of resilience, so choose based on your risk tolerance and investment strategy. That's all for now. If you like my sharing, please don't forget to like, subscribe, and click the notification so that you will not miss out many good trading opportunities. See you on the next one, and trade smart.